So this is the final exam review 2, section 2, and in this section we will be discussing the closing entry. And first of all, let's see which accounts are closed at the end of the accounting period. Okay, so these are the accounts. Say the revenue, so the revenue accounts, expense accounts, net income or net loss, and dividend. These accounts are closed. Okay, these accounts are closed at the end of the accounting period, and these accounts are not closed. In short, they are called ELA. See, ELA accounts, meaning equity, liability, and assets, they are not closed. Okay, have that in mind. So never ever try to close any equity, meaning capital, on liabilities or assets accounts. Okay, and how to close the revenue and expense accounts. This is the template journal entries. So when you're going to close the revenue accounts, so you need to prepare these journal entries. So service revenue debit and income summary credit. So we will write the income summary instead of income statement. Actually, service revenues or all revenues are closed in the income summary, income statement. Okay, so and expenses are closed in the income statement, and they are, meaning the journal entries would be, say, income summary debit and salaries expense credit, any expense. Okay, all the expenses are credit. Okay, income summary debit and expenses are credit. And then to close the net income, see, income summary debit and retained earnings credit. This is net income. And to close the net loss, so if we want to close the net loss, and retained earnings debit and income summary credit. Okay, to close the dividend tax, if there is any dividend, so retained earnings debit and dividend credit. Okay, so let's see one example. So here is an example, and how to prepare the closing entries. So American Chip Corporation's fiscal year end is December 31st. The following is a partial adjusted trial balance as of December 31st, 2018. So we had the retained earnings, sales revenue, interest revenue, service revenue, cost of goods, or all the expenses accounts. Okay, we have. So we need to prepare the closing entries. So dear students, please be careful about that. So we will be closing the revenue accounts. You can see that all the revenues are debited. Okay, so sales revenue debit, interest revenue debit, service revenue debit. So total revenue becomes credit in the income summary. Okay, total revenue we have credited in the income summary. And now we have expenses. So let's see the expenses. Cost of goods sold, credit. Then salaries expense, rent expense, depreciation, interest expense, insurance, utility expense. All the expenses are credited in income statement, meaning income summary. So, and we have debited all the expenses to income statement, and this is the sum of all of these expenses. See that? So we have income summary credit and income summary debit. So here we can see that income summary credit is higher than the income summary debit. So we have a net income. So we need to close this net income. So how do you know that? Say this one. This one minus, meaning credit minus debit. So this is the amount of net income that we need to close. See that? Okay, so we will be closing the net income into retained earnings. So income summary debit and retained earnings credit. This is how. So please pause the video and watch again. Thank you.